Okay, for this next video, we're going to be covering how to report the sale of personal use items for which you received a 1099-K reporting those sales proceeds, but you took a loss on the sale of the item. So in other words, whatever you sold it for was less than what you paid for it, and so you have a loss. Now, the first video, one back, was covering how to report it when you had a gain on the sale of the transaction. Now, the reason why I've separated them is because the IRS guidance has some kind of conflicting information, right? They suggest reporting it one way, but TurboTax and a lot of other software providers, and myself included, the way I think it should be reported is a little differently. So, what we're going to cover here, we've got the 1099-K for the sale of the personal use item. It's going to be at a loss, right? Now, the IRS guidance, which we'll review, suggests that when we have a loss item, we report it on Schedule 1 in Parts 1 and 2, versus the gains are reported on Form 89 and 49 and Schedule D. And this is how TurboTax is treating it. And again, this is how I have treated it in the past and how I would continue to treat it. So I think you should be doing it that way. But if you do use the IRS guidance, you should be okay if you relied upon it to be able to complete the return. So let's go look at the return itself. So first I want to cover, actually let's cover the fact pattern first, because I think that'll be more helpful. So again, this is a continuation of the previous videos. So our taxpayer here, John Q. Taxpayer, he's a sales agent. So we've already reported W-2 income for him, interest, some student loan interest. We've already completed his Schedule C. So that was one of the previous videos. So he had a side hustle business. And then the prior video was this third bullet point here where he sold a TV, personal use TV, right? He bought it for $1,100. He sold it for $1,200. So we had a $100 gain. And so we reported that gain on his tax return. So let me go and look at the return. And I want to show you what the printout looks like right now after we entered the gain from the sale of that personal use item. So if we do a print preview here, just as a recap. Okay, so John's 1040. What we've done in reporting that gain is enter the information on Form 8949 and then Schedule D. Okay, so if we scroll down to 8949, I'll start here first. So here is the sale of the television, right? So we sold the television. The 1099-K and the sales proceeds were $1,200. So we've got the sales proceeds there. We've got our cost basis here. And there's our $100 gain, right? And there's the date acquired and date disposed of. Now, that item flows up to Schedule D. And this is consistent with how the IRS wants us to report all this. If we look at the IRS guidance, what we'll see is they will recommend that we report it this way for the gains, but for the losses, they don't want it reported down here. They don't want us to report losses on 8949, although that's the way we're ultimately going to do it, but they don't want it reported down here. The guidance suggests that everything is entered up here on Schedule 1. So if we scroll up to Schedule 1, I'll show you the line items they're referring to. What they're asking us to do here is on Schedule 1, report the gross sale proceed amount down here on line 8Z, right? So there's going to be an other income entry here, and then you have an offsetting entry down here in the other adjustments, so these zero out. Now, again, at the end of the day, the loss is not deductible, so it should be zero. But it's curious that they wanted us to report it this way rather than just do it on the 8949 and disallow the loss. And so if we quickly jump over to the guidance, and I'll put a link below so you can see where the IRS is coming from. But this is the FAQ published by the IRS in December. So it's FS 2022-41. Now, I think it's really important to read this in full just so you can get an idea as to how this guidance works. So because the FAQs, as they noted here, they have not been published in the Internal Revenue Bulletin, they will not be relied on or used by the IRS to resolve a case. In other words, this is kind of just guidance, but you really shouldn't be relying on it. However, it does say that the law will control the taxpayer's tax liability. Nevertheless, a taxpayer who reasonably and good faith relies on these FAQs will not be subject to penalty that provides a reasonable cause standard for relief, right? So, in other words, the law will always supersede this, right? But you can rely on this if you want to. And so here's the meat of it on page 2, where they cover how they want this to be reported, right? So, are gain or losses on the sale of personal items used to compute your taxable income? The answer is yes, right? So the gain on the sale of personal items is included in your taxable income, right? So they've highlighted that here. The gain on the sale of personal item is taxable. You must report that transaction, the gain, on 8949 of Form 1040, and then Schedule D, capital gains and losses, right? So that's what I just showed you on the printout for John from the last video, right? He had a gain on the sale of that TV. He reported it as such, consistent with how the IRS wants it here. Now here's where it gets a little strange. The loss on the sale of personal items is not deductible. We know this, right? This is very clear in the tax code. Now, if you receive a 1099-K for the sale of a personal item that resulted in a loss, you should make offsetting entries on the 1040, Schedule 1, additional income and adjustments to income. So, again, what they want you to do here is if you sold at a loss, report the proceeds on Part 1, Line 8Z. Use this description, Form 1099-K, personal item sold at a loss. Report the costs up to but not more than the proceeds, right? So again, you report the cost basis, but you can't report the actual cost basis. You just report enough to zero out the proceeds, right? So in this example, the refrigerator sale reports $600 for the sales price, but then on the offsetting entry, only report $600. Don't report the total $1,000. All right, so that's kind of the guidance we're working with here. So let's go back to the tax return, and we'll start to enter some of these details. So if we go back and start at the My Info page. So again, we have a 1098-K, we have an income transaction. So if we go to wages and income, and I want to scroll down to other common income here. So this is where we've been entering the 1099-Ks previously. So I'm going to revisit this section. Other common income, 1099-K. We're going to jump in here. And you can see we've already got some entries here, right? So I had a 1099-K for John from PayPal that is for his business, right? So that was entered accordingly. And then here's the Venmo 1099-K for the sale of that TV. So I'm going to add another one because we received a separate 1099-K from Cash App. So here's the fact pattern that we're working with now. On May 1st, John, again, he had this yard sale, and he sold a used couch from his family room for $900. Now, he bought that couch years ago for $1,900. So, sold it for $900, bought it for $19. That's a $1,000 loss. Now, the buyer transferred John the money via Cash App. Then John got a 1099-K reporting the gross sale price of $1,900. Now, under the rules here, yes, he had a loss. But it's a personal use item. Personal losses are generally not tax deductible, right? So he's not going to be able to deduct this loss like you would if it was an investment, right? So if you sell stocks at a loss or bonds, those are investments. You could take losses there, but not in this context. All right, so if we go back to the return, right, we're going to enter a 1099-K from Cash App. Now, the type of income, consistent with what we had in the prior video, right, the Venmo for the TV, we have a personal item sale, right? So it's not real estate property, it's not self-employed income, right? Not rental of personal property or hobby income, right? This is a one-off transaction. It's not a hobby he has of selling this. So we have personal item sale, continue, and then enter the information that you see on the 1099-K. So in this case, it was from Cash App. Again, this is not real, tax ID numbers or 1099-Ks we're working with here. Enter the EIN. Now, the gross amount of the transaction was $900, right? So he sold it for $900, got a 1099-K for $900, and there was no federal withholding and no state information. So continue, And then similar prompt that we received on the last video, personal use item sales. So what TurboTax has done is they've added this to the system, but we still need to provide more information on the cost basis, how long we held the property for, and what was it. Because you notice there, we didn't enter any information on what the sale was. We just entered the 1099K. So the FAQs point us in the right direction here. So they asked us to go to the section for investments and savings. And then in the investments and savings section, we should see a prompt to add more information for this Cash App entry. Okay, so if we hit continue, hit done, and then we're going to scroll down to the investments and savings section. And then we are going to look at the stocks, crypto, mutual funds, bonds, and other section, right? So we're going to revisit this. And here we see the prompt for the Cash App entry, personal item sales, needs a review, right? Because right now it's showing 0 total gain or loss. So we're going to click review there. Go ahead and close this. And so here's where we enter information on the sale. So it's a personal item sale. How do we receive the investment? We purchased it, and it was a couch, right? Now, when did you receive this investment? So when did you buy it? Now, this is often kind of confusing, right? Because obviously for personal use items, you know, if you've had something for many years, you're not going to remember the exact date you bought it, nor are you going to keep a receipt. Obviously, if you have the receipts, use them. But, you know, you can use a best, you know, good faith estimate here. John recalls going to, let's say, a 4th of July sale. So, you know, if we just estimate, you know, July 1st, and what was it? He said 2016 he bought it, 6 years he's had the couch, something like that. You know, that's sufficient, right? The point is, it's a long-term transaction. And then again, it's really a moot issue because the loss is not going to be deductible. So you're really just kind of entering information for the heck of it. But we'll go ahead and do it anyway. And then the sale date. So this is the yard sale date, May 1st, 2022. So we'll go ahead and enter May 1st, 2022. Now the proceeds, again, this in this circumstance, it matches what's on the 1099K, right? So the proceeds of the transaction were $900. Now the total amount he paid for it, right, his cost basis was $1,900, right? That's $1,000 loss. So we've got the $900, the $1,900. Go ahead and hit continue. It's asking us if these additional situations apply, right? So do you have selling expenses that weren't included in the sales proceeds? In this case, no. There's no sales expenses attributed to this. So we're going to hit none, click through. It turns out you can't take a loss on personal use property. That's true, right? That's what we're expecting. So we'll record the sale with a 0 loss. That's fine. That's what we're expecting. So these are our Cash App sales. We've got the couch. Date disposed of. It's a long term, right? Because I held it longer than a year. Sales proceeds, cost basis, gain or loss is 0, right? And that's it. So that looks good. So now click through continue. Go ahead and make sure all these are done. Confirm. Your capital gain so far is 100. That's from the previous entry. And okay, so now that we've got that entered, let's look at how it's being carried over to the tax return. So again, we're going to pull up a preview this year's return, 2022, view. And then I'm going to zoom in here so we get a full picture. Okay, so here's the start of the return. Remember, the relevant pieces we're looking for here are what happened with Schedule 1, and then what happened with 8949 and Schedule D. So you notice here on Schedule 1, we don't have an entry down here on 8Z, right? So TurboTax hasn't pushed the 1099K amount here. And then likewise in Part 2, it hasn't created offsetting entries here. What it has done is it's added it to the 8949 and the Schedule D. So if I go to the Schedule D, So there's the television. That's the first one. Schedule D, or sorry, 8949 Part 2, long term, right? So here we have our long term transactions not on 1099B. Remember, 1099B is different than 1099K. Okay, so this is not reported on a 1099B. We have our couch, date acquired, date sold, proceeds, cost basis, and code L with a $1,000 adjustment. So code L means non-deductible loss. Okay. And so there's the adjustment. So what we're doing here is we're figuring proceeds minus cost is our loss of 1,000, but we're having an add back adjustment. So ultimately the gain or loss is 0. Now, again, this is the presentation I agree with. I would do it this way. But the IRS instructions, as we looked at earlier, if it's a loss transaction, they'd rather you report it a different way. Now, I did try to kind of play around with the software a bit and see if I could kind of trick it into putting it up here on Schedule 1. Now, the best I could do is get it to be on Schedule 1, Part 1, and then I could get the 1099K entry down here on 8Z, but there was just no avenue I found to be able to get the offsetting entry here in Part 2, line 24Z. So in other words, if you try to force it through TurboTax to be on this line item, it's going to just be included in income. I couldn't get another offsetting entry down here on 24Z. So, again, I'm not going to, create more headaches for myself by really trying to dig in there and see if I can get that to work. I agree with the presentation that TurboTax has automatically done here. And again, this is how I would report it, whether I was using TurboTax or by hand or another piece of software like Drake or Lacert. I would report it this way on 8949 with the loss, and then the adjustment to zero out the loss to make sure there is no loss, and then a code L for the adjustment reason. All right. Okay, so, thanks for sticking with me to the end here. I hope that was helpful. If you have any questions, leave me a comment below. And again, I look forward to seeing you on the next video. Thank you.